Now that we're logged in as a manager, we have the ability to approve and reject journal entries. Let us go to the journalize functionality now so that we can approve the adjusting entries that are still pending in the system. Now that all of our adjusting entries have been approved, we're going to expect some of our financial statements to state different values now. In fact, we would expect all of them to have different values. We can see by going to the trial balance that the trial balance has now become $36,195, which is a change from the original trial balance of $35,675. However, we can see that the debits and credits are still balanced. If we go to our income statement, we can see that our net income is now $4,525 rather than the original $5,675. When we go to our balance sheet, we see that our balance sheet has a total assets and total equity liability value of $26,795, which is a change from the original $29,925 we had before we approved our adjusting entries. However, the assets still equal the equity plus the total liabilities. And finally, our statement of retained earnings now has us at an ending balance of $4,525, which is changed from the original $5,675 that it was before adjusting entries. The final thing we can do as part of our accounting process as a manager is closing the accounts, specifically the temporary accounts, which are the revenue and expense accounts. By going to the journalize functionality and clicking the close accounts button, a closing entry will be generated by the system, which can be approved by the manager or rejected. This entry will zero out all revenue and expense accounts. We're going to go ahead and approve this entry. After approving the closing entry, our financial statements will be final for the accounting period. We can see that our trial balance is now adjusted to become our post-closing trial balance, and it is $27,295, and the debits and credits still match. Our income statement is now zero since our revenue and expense accounts are zero, which means our net income now is zero as we are in a new accounting period. Our balance sheet shows the value of our assets versus our equity and liabilities, which are nominal accounts. And our statement of retained earnings is still $4,525, but now the net income has been moved into the beginning balance, and it is now our retained earnings for the accounting period, as can be seen in the chart of accounts, where we can see retained earnings now has a balance of $4,525.